We are joined once again by Fibbo Swanee, the great Fibbo Swanee, who has been making some absolutely amazing macro calls for Bitcoin that we've been following on this channel for. This is like going on 2 years now, something like this. It's getting crazy.
No, I think
Anyways,
it might have been three.
yeah, it might be three. It might be three at this point, indeed. Anyways, we are blessed to have Swanee back as well. And after many, many requests, both to myself and himself, we finally have gotten together. And I'll just let you take it from here. I want you to run through everything that you want to run through, and kind of tell us where we are in this grand like thread of analysis that we've been following for multiple years now.
Oh, awesome. Thank you for having me again there, Crown. Yeah, I'm just gonna go over Bitcoin today. Just kind of give you some ideas of what's going on, or at least from my perspective, when it comes to threshold theory and Fibonacci. But we're gonna start. I'm gonna touch a little bit on the 4-hour and the daily before we go into the higher time frames, just to kind of set a premise, get a little bit of a premise of what's going on. Right now, we're getting a little dumped on at the moment, as you can see on this large red candle to the downside. But when I've been following the 4-hour here, this bear zone back here went in and we got filled. There was an order in at 81.6 that was filled from some previous stuff, and then we went into a bull zone right here, and then we ended up buying again. Now we had a target up here inside the extension here at 127 to 141 between 88.3 and 89.1. I had an order in at 88.5 to take profit on the 81.6 and got it very nicely on that little wick that we had.
It's precision.
No, it's good for limit orders, because if you weren't paying attention, it was pretty quick. And then we came back down, and then the shallow fib filled. So I'm still 20% long, even though it went into the bear zone here. Basically what happened was we clicked right into the bear zone at 40.15 on the RSI, and anything under 40.35 would bring it into the bear zone. And being that close, I still need to go back and see if the zones need adjusted, which I don't think they do from when I look back, just kind of eyeballing it. So I'm going to keep this as a bear zone. But what I did instead was this low right here at 177. I just, instead of just selling out of my 20% and just to have some exposure, I just put a stop just underneath that in case if it gets stopped out, then I'm in the bear zone. And then what I'm going to be looking for is a movement back down to the next target if we get stopped out here at 76.4. And these anywhere in the 76 to 73 range is I feel is still in play, even though we're bearish on the 4-hour, bearish on the daily, but the weekly is still, kind of hanging up there. Like, you remember those little posters with the cats that were hanging there for a long time?
Yeah,
that's kind of what's that's kind of what's happening with the weekly at the moment. But we'll get there. But I just wanted to kind of show that, if this gets stopped out, the 70 range is still in play when it comes to getting back long in the 4-hour range, or if we get into a new bull zone, which it has to get up to about 88.6 to get back into the bull zone. And then the thing that I like,
take out Wednesday's high.
Exactly. Yeah, exactly.
Yeah.
And another thing I like about this 88.6 area is when you go on to the daily, the daily is about 80. It's about 88.7. So somewhere up and around that range, if we can get the 4-hour and the daily pretty close to each other to get back into the bull zone, that would be a great signal. However, we're in the bear zone. I am long 20% also on the daily, and that was because the 61.8% level hit once this broke down here and we went into the bear zone. This was my buy area at 78.3. I have actually it was 78.350 that I have bought twice. This one came down and hit right here, and then we hit again here. And I decided the risk reward here is great. If it's going to hold, I definitely want to be long at this level because I think the upside potential could be great if it starts to get some momentum going that direction. Otherwise, then three settles underneath this, and then I'm out, and then you take your loss and get back to the drawing board. But I wanted to kind of show these levels on the 4-hour here at 76 that could still be in play if this falls out of bed. And then the target here that we bought already on the daily is still really key support while we're in the bear zone. The other thing that I have on the 4-hour and the daily is that the momentum is still not that great for. It's a little bit decent for the bears just because we've had this large, movement to the downside, but it's still not gaining anything. It's still like slanting to the downside. So to me, that's still a sign of consolidation, which could give us a little bit of hope that buying interest is still going to maybe come in at these support levels. But again, that's why you have a plan, and that's why you look at different levels to either buy or get stopped out in case you're wrong. But that's what I was just kind of showing on the 4-hour and daily, just to kind of set that premise of where this level is and how important it is at this point in time. Now let's go on to the weekly, and this is where it's going to get a little bit crazy on these charts. So hopefully I can explain them. But the one thing I'm looking at on the weekly, and this is going to be my key chart that I'm really watching, is the bull zone down here. Right down here on this RSI on these levels have been kind of touching right down on these levels, but not going bear. The bear zone right now is at 77.1, which is a little bit higher than what this 38.2% level is at 75,364. So this shallow fib is kind of my line in the sand. So even if this goes into the bear zone underneath 77, there still needs to be 3 weekly settlements underneath the 75,364. If we get that, and that's kind of that line in the sand, because when I look over here at the daily, that's where my that 70. Well, this one's 78, but basically you need to have 3 settles on a lot of these supports. But this whole lower 70s is going to be very important, because if we get into the bear zone on this weekly, and we get 3 settlements under 75,360, then the next target is going to be, you're going to see a 50 handle. Like, that's where it could really get ugly and get into this much larger correction. But I do like this level as a key level to watch to keep this bullish structure in play. For one, the 38.2% level here at 75.3 is right at this previous high here. So there's there should be a lot of buying interest to keep this bullish structure there. Again, when you look at the internal momentum, the ADX that measures the trend strength, for either one, the bears tried to get some momentum going on the downside here, but the ADX has been dropping ever since. So so even on the weekly, you're still getting a sign of a possible consolidation of where we're at. But one of the main things I look here on the daily that's very key to me, and let me pull this up a little bit so you can see it probably a little better. When I look at Fibonacci and extensions, and we're looking at this high to low to where we get the extensions here at the 127 to 141, that's between 83.5 and 91.1, and that's what I'm marking here as support zone. And to me, it's still support, because when you look at this 83.548 right here, this red candle closed under it, and then the second candle did, but the third one did not. And I am always needing 3 consecutive settlements to break the support. And now we're back trying it again. Last week, we settled back underneath of it. And this week right now, if we settled out this week right now, it would be the second week. And then the third week underneath that would be a signal to say, okay, this 83.5 is going to become resistance instead of support. So that's one of the things I'm looking at. But so far, when it came down here to test and came back up, it held. So I want to maintain that support. I want to maintain that this shallow fib could still possibly hold. But the thing is, if we get through that third settle under the weekly there, I can see us going to 75 pretty easily, and then kind of testing that shallow fib level. And if we get the 3 settles under that, that's where that 50 handle kind of comes into play. So that's one thing I'm really watching on a lot of these longer time frames is are these support levels on these fibs areas holding or not? And so far that one is. And when you look back, I mean, you can go back and look at some other Like if you take fibs on some absolute highs and lows, like, I mean, just let's take this one, for example. If you pull this one, let me get that right there. Same kind of thing. Like when this came up, you can see this 16 to 18 here. It kind of came up and touched the top right at this point. It's kind of hard to see, but it came up and then the red candle came right back down to test the bottom here. And then it took off. But this one was a nice bullish run. But then again, these are the things that I look for, because that 127 to 141% level is kind of my first line of defense of because what makes a good technician is someone that can tell you when the trends are going to reverse. And a lot of times that's that first line of defense of a possible reversal as things are trying to go and extend. If they're going to extend, that's going to be the spot that it should reverse. But if it doesn't and it breaks through, then you're off to the races, and the 200% level comes into play and those kind of things. And that's why I got the 200% up here as the next target. So if this ends up holding and this bull zone holds and we get some momentum and we get the 4 hour and the daily back in bull and get going again, the next target would be 122 based on the patterns here, as long as this support holds on there. Let's see, we got the I'm trying to see if this was an example here, but this one went to the extension here and it wicked up to the 127 right here and then went back down. So this one just stayed as resistance and never really tested or went through it when you look at further back. But that's what I'm kind of looking at on the weekly here. So everything right now is still going to be really key in this 70s area. So I wouldn't be surprised if we dropped it down to that point and, kind of freak everybody out and get down to that, 75, 76 area and think that the sky is falling, but it might not just be falling just yet. But we could come back down to that area and kind of test everybody's emotions of fear, right? And see if that come in. But if it breaks, it breaks, and that's what risk management's about. And then we'll go back.
I'm definitely with you on the relevance of that region. I'm a little bit higher than you, basically the March lows, but if I start to see closures below there, I think it's 50. I think there's been bounces along the way, of course, but
I can see a 50 handle if this ends up breaking for sure. Which would be kind of ugly, but I mean, it is what it is. So let's go on to this.
The fun stuff.
Yeah, I went on to the 8-day. I like the 8-day for timing. The 8-day has really, really good timing in it. But what I did on this one, and this one's very interesting to me, and this is all based on that weekly holding, right? We need that weekly to hold support. So what I did here, we got these vertical lines I have on here. But what I did, I looked at the 21 and the 55 EMA, and that's the red and blue lines here. So every time the blue crossed the blue 21 crossed down through the 55 or crossed up through the 55, that's what these lines are on every time they crossed. Okay, that's what all these vertical lines are. So what I did was I looked at these trend lines. And one, I've done this before. You take the furthest point underneath the trend line to the trend line itself, and you get a target that you get off that trend line break. Right. But what I did here was when the blue 21 crosses up through the 55, I started right at that point, and then I went to the high, and it took 92 bars to get there. And this is an 8-day, so basically a week. To get from when that moving average crossed, because that should be kind of a bullish cross, right? So you cross over into that, and then the blue rallies all the way of it, and then stays, and then it crosses right here, and then goes back up. But what I'm looking at is this break of the trend line to where you get that first objective, and that's where this 361% Fibonacci comes into play right here, which I think is very interesting. Because every time, if you go back since the beginning of Bitcoin and you take these absolute highs into their corrections, every time it hit the 361% level. But the interesting thing here is that it broke and matched exactly the rate of change on this, and it kind of hit this target pretty nicely. So what I did was I went and I said, okay, let me check here and see if this did it again. And we crossed it, and then we crossed back over. And I did the same thing. We had the trend line here. The trend line broke, retested, and went back up. And then this one had the target of this rate of change, and it went right up. This one didn't quite get there to the 361%, but the market did. So the market went up and tested that 361%. And if you take the point of break of the moving averages here and you go over to the high, it was 111 bars. And then I went down to where we're at today. And then the crossover on the moving average, and then it crossed back right here. You take that same rate of change underneath the trend line break, we broke, retested, and then went higher. That matches right at the 361% level, which is at 209 or 208, 209, somewhere right around there. So to me, if this ends up holding the way it is, I still want to be, as long as the weekly holds that support, then I still think we can get to 209 by the third or fourth quarter of this year. I know that's still kind of crazy to think, but as long as this bullish structure is still in play, and these moving averages are nowhere near close to crossing. Now, of course, if it breaks and goes to the 50 handle, it's gonna cross. But right now the blue is still above the red on the moving average. We're at that trend line. There's a trend line there that should find some buying interest, which is this dotted line and those kind of things. So what I did up here was, at the time, I did the 92, and then I also did the 111, which is both of these time frames, just to see where it would fall. But then you take this cycle here and you go from high to high to high, which matches perfectly. And then if you come over to this side, this comes in, and this is an 8-day, but this is showing September, basically late September of 25, which falls really nicely in between these two ranges here, based on the timing of the trend line break and the point to the high. So I like that pattern. And so hopefully it just comes to fruition and it'll be awesome. But that's what I'm kind of still kind of holding out for, as long as the bullish structure is in play, and still it is on a long-term basis. So that's that chart. So, and then going on to this, the only thing I want to show on this, and what I did here was, the candles are 2024. And then at the point of halving, I just put in the line chart of how the price reacted from the point of the halving to, out to the future, to show where I kind of wanted to see where the highs landed. And that's what I was kind of looking for. And then I also put some trend lines in here where we're at. And the interesting thing that we're seeing on these two trend lines is this is the one that I'm saying that we're at right now. And that's where we've been kind of testing. And that's where this is kind of coming from. I don't have it drawn in here, but we're right at this, we're right at a trend line on this point right here. And that's where this is coming from. So what I did was, this is where if this trend line breaks, we go to this trend line, and that's where the 50s kind of come into play. I think I have a chart. Yeah, this one right here is what I was kind of playing with. I was just taking like the general trend of this, and then the general trend of this correction. So if this ends up breaking this trend line, then you're looking at, this shows about 58 to hit that next trend line, and that's what that's what I'm looking at at this point right here. So if this ends up breaking, it would come down to this trend line. But if this holds, as you can see, every one of these years made a higher high. Now, 2020 after the halving made a slightly higher high, but it did make a higher high. And then of course the blue did, and the green, which is 2012 and 2016. But here we are in 2024, right on this point right here. So if this wants to, rhyme with the previous years, then
it must bounce here.
It must bounce here, yes.
Yeah.
And if it doesn't, then we're in a whole different world. I mean, it's like, okay, all patterns are out, everything's out.
I think it breaks pretty much all models if that happens.
Yes, yeah, exactly.
Like all long-term models.
And one thing I think I like about that, if it does happen, then what'll happen is all the people that actually know what they're doing will rise to the top, and all their shitheads
you
will
can't just play.
You just can't play the patterns anymore, right? So so experience will definitely be coming into play if something like that happens. So that's all I had on this one. Nothing really crazy, but if you look at the timing of when all of these made highs, these all made highs in the fourth quarter, or no, September 6th through November of basically September to November, basically. And if that's going to hold true from what we're looking at back here, that makes sense to go from high to high to high to high in that September. This one comes out September 22nd for that week, for that high. So that kind of comes into this whole pattern of trend line break to the 361, trend line break to 361, trend line break to 361. We'll see if it happens. And then I was just looking for the timing there. That's all that was. And then going on to this chart, this is the monthly. And again, this is where I'm kind of looking at those support levels just on an easier view. Like we were talking about before, the high to the low. And then you look at that extension that we were looking at before, and I got it highlighted here. We've already had one monthly close underneath the 83,556. We're working on the second one at the moment, but of course we just started the month pretty much, so we got a lot of time to see if that'll happen. But just like on the weekly, if we get 3 monthly settlements underneath this, that's just gonna be an ugly look also. But right now this still holds support because we don't have the 3 settles. But I'm looking at the weekly at a little closer on this one. But this one just kind of shows it's a cleaner look is what it is. So you're kind of waiting this one out to see if it's going to happen or not. So if this ends up holding, and since we had 3 settles above the 141% right here, and even though we've corrected back, the 122 is still in play as that next resistance target as a minimum. I mean, it could definitely go higher than that, but that's just the next target if this holds. And that's why I got this all kind of highlighted in there. So still in a support zone, but like you said, it's that cat that's hanging in there, trying, possibly falling, maybe not. And then on this one, and this is where I wanted to show the timing, and this is where this October, November, December of 25 kind of comes into play. Is it's just another view of the 361s for every time. But this one from the low here, I did a low to low to low timing. This one missed just by a month. When I broke it down from a quarterly chart back to a monthly, this one missed it by just a month. So so this low to low to low is just off a month right here. So that's still pretty decent from a cycle perspective, from a low to low to low here. So if this happens, then we should get up and make our new high here in that December time period. And then April of 26 is when that should correct back pretty hard and make that low, if it wants to keep that same type of pattern going.
Right.
So, and then the other thing I was looking at was from the low to the high was 11 bars here. It was 12 bars here. And then that's where I get the 12 bars from this low to that October, November, December. Now, if you move this back that 1 month that was off, that's where that September comes into play. So September could actually be where the high comes in, based on we were looking at back here. I think it was somewhere we were looking at that September timeframe. It was right in here at the September. So when you look at the monthly like this, this kind of comes in 1 month earlier. If you want to do this 1 month early, then this would, come in at September. But I really like the October, November, December timeframe as a possibility of that higher high for the year. Now, if we drop down to if we break that momentum or the support on the weekly and it drops
Forget it.
into the 50s, then you might even have the case of what you're talking about, of that 109 that we've had could be the cycle high if it gets really ugly. But it also could come out to be where it rallies back up and you go to that 120 and that's your high and then you're done, that kind of thing.
Yeah.
But I'll have to go back to the drawing board and do a lot of analysis if this weekly breaks down and that 50 becomes a target, because like what you're saying, models will break. There's a whole bunch of things that we'll have to go back to the drawing board and do some analysis and figure out what in the hell's going on. But for now,
let me ask you this. Sorry, I don't mean to cut you off.
Interrupt anytime, man.
Do you feel like Bitcoin, ever since it got the spot ETF, that it's been trading more like a traditional market ETF, where it kind of like it moves up, takes its time consolidating, moves up again, carries that range, these sort of
Yeah,
things?
the price action has definitely been different.
Yeah, I agree.
I'm sure that's probably a factor. It's it hasn't really it hasn't changed anything that I'm looking at based on what I do on thresholds
Hmm.
yet. And but the interesting thing is like this kind of thing hasn't happened in a while. When it just dipped into the bear zone barely with the 40.35 into 40.15,
Yeah.
that hasn't happened in years.
Oh
So
wow.
so for that happening right there, that is price action acting differently.
Yeah.
So in other words, the psychology in the market, because that's what I'm trying to measure, is that threshold from jumping from bull to bear might have switched a little bit. And if that's happening, and right now it doesn't look like it because I have to go back and make sure, but if it is, that's one of the factors I think is coming into play. Is you have a whole different audience of buyers and sellers in there now that
Yeah.
changes that social mood of the psychology that's playing in the market. So I think that's kind of starting to change a little bit. But that's where my method kind of comes into where, yes, there is the thresholds and they do happen all
You
the
can always
time.
adjust these.
You have to maintain them,
Yeah.
yes, because they do change based on the psychology or
Right.
the
Right.
changing of the world, right? Um, so it doesn't happen very often on things that have been alive for a while. Now, if you're looking at shit coins and stuff, that
Good luck.
yeah, the maintenance is a little tougher on those. But these
Right.
things are a little bit more established and higher liquidity trading things like, especially like the S&P and those things like that.
Right. Yeah.
Those things hardly ever change. It probably takes 2-3 years, maybe even longer, to
Mm.
even make a change if you got your zones right, of course. But the thing is, you might take a couple of times to adjust it to get it right. But once it's right, then you're golden for a while. And I've been set that way for a while, and I've been maintaining them for a long time. So it's I'm kind of on this like I'm kind of rolling with it now. It's the beginning of the things of getting it established is when it's tough. But once you get it and you start maintaining it, then it works from there. Where was I? That one. What else I got? That's it, man. I don't know what else to talk about besides.
You ran through it all.
Yeah, I mean,
I think that's a good place.
the main thing here is this pattern. I really wanted to show this pattern to people because I thought it was very interesting. The cross of the moving averages, and then you take that point of cross to the high was, and then the break of these trend lines coming up to their first targets, and hitting that 38 point or the 361.8% level. I think I have a chart. I don't know if you can show where's that other chart I had with the 300. I'm losing my mind here. I'm just wondering if we go back because basically, if you go back to, let me pull up the whole history. If you go back all the way back, and you can do this for fun if you guys want to, but if go back and go to you go all the way back to the very beginning. Every one of these, like if you take the fib, and this is all that pattern that we're talking about, as long as the support holds, every one, if you take the high to the low right here, I don't have the 38.2% level on this one. Of course I don't. 3618, there we go. Put that in there. And then the 3618, let's blow this up since it's getting into these small levels. Yeah, it matches up really right there at this is $110 because this is way back when, but the pattern's the same. You break into these, you break into this area, and this was a target. Every time. I didn't do all the trend lines and the moving averages, but this the blue, this is just too early. It didn't cross here, but it kind of stayed. But you could do that on every one of these. If you want to go back to every one of these little ones too, it all works. It's really crazy. On how that happens. But like you said, if this ends up breaking down here and we get the three settles underneath the 75.3 for me, that's my level. 3 weekly settlements underneath that level, that's where the 50s would come into play. And then that breaks this whole entire pattern. So if that happens, then what do? Then people are going to ask, well, if that breaks and we go to 50, then the way I would play it is I would play capital preservation. I would probably be buying puts of some sort. I haven't looked into that yet because I'm still, trying to maintain these longs and
it's not a bad time right now. Volatility is quite low.
Yeah, exactly. And then the other things I would do is like on the daily here, or even on the 4 hour. If you're in the bear zone, I will look for targets like this 70. I'm just going to use this as an example. Say we're moving toward 50K and everything's to the downside. The only way I'll play the longs on the 4 hour and the daily is to find targets while we're correcting. And just like, I'm just going to use this as an example. If this comes down to this target and fills, the shallow fib here at the 38.2% level would be my would be my sell. So basically I'll be buying off the support targets of my fib extensions and then selling into that point and then looking for that next target to the downside. But that's the only way I would play the longs on the 4 hour and the daily if the weekly is in the bearish way. Or you can short the market, which I'm not a big person that likes to short the market. I'd rather just buy puts, and then while I'm buying the puts and playing the downside to capture some of that money, or that opportunity for the downside there, then I can play my 4 hour and daily and trade those bounces. Yeah, and that's how I would approach it. But hopefully we don't have to, and the weekly holds, and we can get out of this mess and go higher. But right now, consolidation here on the 4 hour, I'm still not stopped out. I wouldn't be surprised if I am, because the S&P hit my target. Buy.
Yeah, I was just looking at NAS earlier.
Yep. I had a limit order in right there, so I'm already in the money. Should I just sell it and take profit? No, I'm just kidding.
I'm rich.
Yep, I'm already making money. No, but no, I had a limit in there. But this is coming down super, super hard. Yeah. But what makes me a little bit hopium is that we're still holding support in Bitcoin, even though this is happening. That's a plus. Now, not that we can't roll over and we'll be at 50K in the next month.
I think there can be a lag, honestly.
Yeah, that too. Yeah,
let me ask you a couple questions to wrap it up. So one, and this is just complete gut feeling, just complete gut feeling.
Yep.
No one's going to hold you to this, but just for fun, do you think it will break down? Or will it hold and maintain the trend?
I am going to say it holds.
Okay.
That's a tough question.
I know.
The
$1 million question.
My gut says yes, and there's a few little reasons. These aren't going to be like the best reasons in the world. One thing I do like here on the daily is these two lows right here. I like that we went into the oversold conditions and had a nice little divergence right here, right? Which kind of helps hold that 70-ish area.
Yeah,
possibly. Yeah. I know that's small and very petty, but that's one. There's other little things I'm looking at that I've looked back, and there's a lot of very significant levels. This previous high right here is key. I don't know. My gut says that it holds, and another reason for that is all these measurements of my trend momentums. I look at other things besides the ADX, but the ADX is in my formula for my threshold.
Yeah.
But I look at other momentum indicators. I got a whole momentum model that I have, and none of those are really building either way. It's like the bears really aren't gathering anything, and the bulls really aren't
spinning their wheels.
Yeah. So as long as that's staying and they're spinning their wheels, that's another thing that's giving me a little bit of hope that it'll hold.
Right.
So my gut says yes.
Don't sell a dull market short.
That's exactly. So it's my gut says yes, but I wouldn't be surprised if it didn't. Put it that way.
Right.
But my gut says yes.
Just as a gut answer. And then also let's recap your main points. So I'll spit it back to you just to make sure that I got it, and you correct me if I'm wrong at any points. Main points here, especially on the higher term timeframes, the key level for bulls to hold to keep the bull market hopium alive is about $75,000.
Yep,
that's correct. Okay, yes.
Yeah, and especially on the weekly time frame, If we get 3 weekly settlements underneath that price point, that flips it to resistance for me. And then that's where the 50
that
comes
becomes
in
a
as
key
support.
level back on the way up.
Yes.
Gotcha.
Yep.
Okay. Now, assuming it holds, then we're likely looking at, if models do hold up, is first about 122, kind of on the lower end for the next move, and then likely a cycle end around September, maybe October, with potentially a little over 200,000. Is that right?
Yeah, that makes sense.
Indeed.
Because another thing here is when you look at it on the monthly, and the blue fibs here. This is where this is 73.4 is the shallow fib here, which is this previous high. That kind of comes into play of that 75-ish area on the weekly. If we get 3 settles underneath of it, it could get underneath this level here. And then if that breaks, then you're looking down at this 51. So what'll happen is you'll get this correction down to this point, the 61.8% level. Now that level should hold because in theory, if that breaks, then shit, we're going back to like 10 grand. Based on a lot of patterns, but this 51 would likely hold and go forward. So the way I would have to approach this is, if you just for shits and giggles here real quick, if you go down to here and go down to this point and say the this 50-ish area holds, that 122 that I was looking at, I can't remember what chart it was, kind of comes in at this extension. So that would be that first line of defense, right? So if this comes down into this point, we might only get up to that 122, and that's your high, and it holds and goes lower. And that's been kind of what you've been looking at on a lot of your statistics and timing of you've been looking at, is that 109 could be it. But maybe we get a little bit higher later on, but maybe not. Maybe it just gets a full retracement back to the 109, and that's it. And then we head lower. But that's the way I would approach it, that 122 would come into play. Then if we get beyond that, then we're going to get more targets. So I'm looking at, if it holds, we'll pop to 122, come back to some support level. I'd have to figure out where. And then it would go up to that 209 or whatever later on. But that's a lot of ifs, but go ahead.
Of course. No, I just wanted to recap it for the viewers, just so that we have a nice flow there. Yeah, man, I think you absolutely nailed it as always. And I'm aware that you do have a time constraint going on here, so I don't want to hold you for too long, but I definitely want to let people know, check out Swanee's stuff. He's very, very active on Twitter, very active on TradingView. His links will be in the description below. He also, of course, has his own group where he divulges the secrets of his system that you just saw here. It's actually really, really cool. And
that's at TWC.
There we go. Indeed. And all of these links will be below. And yeah, man, just want to say thanks for coming on again. And
you bet,
as always, the invitation is open. You just let me know when you want to come back, when you got something new to say.
Thank you very much.
Let's do it.
I appreciate it. All right, man. You take care. We'll talk soon, and I'll see you at 209.
Perfect.